Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, January 10th, 2025. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame here. This is post-jobs report. We got the NFP report here this morning, and 256,000 jobs added in December with a downward revision to 212K in November. And as of right now, initial selling pressure coming out of the market here. One of the things we had heading into the day was based off of Wednesday's compression here in a downward slope. We were looking for a failed new high and an outside day down continuation. No failed new high, but definitely a downward continuation here with a strong low developing here so far this morning. We're still working our way downward as well toward the key range low here, which is about 58.66, and that could spill over into the quarterly low down below, which is just around the 57.24 level. Again, we also have a naked FOMC key level below at 5,700 and a quarter. That's from the September 18th meeting, and that could be a target down the road. So again, after the strong rejection here and sell-off during the December 18th FOMC meeting here, we've had lower highs, and some compression again. That could lead to a bit more of a rotation to the downside toward that 5,700 level up ahead. From an intraday perspective here, keep an eye on 59.20. A failure to recover that level could lead to additional selling pressure up ahead today. Looking at the NQ, the NQ down about 1% right now and seeing selling pressure as well. Very similar to the ES, not quite the failed new high outside day down, but definitely selling pressure through the previous lows. Approaching the key range low here at 2100 and remaining bearish at the moment. Strong low developing here in the intraday time frame, but got to keep an eye on the previous session's low at 21,166. Yes, 21,166. That's the level to keep an eye on here. A recovery of that level, and we could be looking at a bounce back up the way toward 21.3 on an intraday basis. But overall, the downtrend remains in effect as of right now, and any pullback could be sold in the near term for a stretch toward that 21,000 level. That's the key range low, and into the previous month's low. As of right now, you know, any kind of failure through 21K here, and you start to open up that quarterly low down below, which is just shy of the 20,000 level, with a rising 200-day moving average at 19,741. So how much pullback do we get here to begin the year? And 21K is going to be the early test here that opens up new lows down below. Can they hold this level after this pullback? Again, this market has been very resilient across the board, and pullbacks have been defended. How will the market respond here to begin the year this time around? Looking at crude oil, this one's having a monster day here today, up 4% right now. MGR gap up. MGR buy signals here. That's when you close near the lows of the previous day and then open with a gap above the previous day's midpoint. That is a tremendous gap and run. Up 4% and now over the $77 level. Remember, to end the year, we were looking for an end-of-year rally, and we were looking for strength to begin the year that would take us into the 78.50 level right off the bat, and we're very close to that level already, trading just $1.50 off of that level. And we're looking for follow-through toward the $80 level here as well. Now, overall, very, very bullish unidirectional trend here today. Not a trend to fade as of right now. There's no real rejection to work with at the moment in crude. Instead, we're seeing quite a bit of strength through the 200-day moving average, and we're seeing price push through finishing value, finishing VWAP from the previous year on a yearly basis. So very, very strong, and we could continue to see strength out of this market here up ahead with 78.50 down the road. Looking at gold futures, this one's up 0.6% right now. And finally showing a little bit of juice outside of this compression here. This thing's been stuck between the 2600 level and 2680 level. Finally getting a push through that level and above 2700 right now. Now, as I mentioned before here, this thing's kind of been stuck in a larger trading range, so to get away from the middle portion of the range is good. You could make a move to the edge. Once you get to the edge, it could be a fading opportunity back to the middle. Same thing if it had dropped to the bottom. Could be a reversal off the low edge back to the middle. So right now, very bullish here to begin the day. On an intraday basis, it has developed a nice impulse move for a key range. And we could be looking at kind of a development within that range here throughout much of the day with an upward bias. So between basically the low here of 2687 to the high of 2710, that zone right there could be much of the range for today. Fade the edges with an upward bias here in gold. Looking at the YM, this one's down 0.8% right now and testing the previous month's low price. That's your previous month's low right here, which is also a key range low, 42,496. Right now we're at 42,500 after bouncing modestly off that level. We are testing those lows. This one again has been the one that has kind of led the way downward, not just in December but also here in January. On Monday, nice rejection here, and we've been looking for inverted check mark days down as this thing works its way lower. Overall, this thing could see further weakness toward the quarterly low down below. The quarterly low is not too far off here. It's around the 41,800 level. And once we hit that quarterly low, there could be an opportunity to trap below the quarterly low and return it back to the upside here. A failure to do so, and you're rotating downward toward a couple of these lower targets, 40,500 and just shy of that at the previous year's closing yearly VWAP. So there could be a little bit more selling pressure up ahead. Keeping an eye on the quarterly low for the initial rejection opportunity. Now Bitcoin, this one here with a little bit of a bounce, up 2% here today. This one's had a little bit of a back and forth start to the year, up hard first and down hard later, and you're still stuck in this range. Very clear range between the 109 level and 92s. Nice and tight, starting to look a little rounded on the upper end, and as I've noted before, there's still all of this thin portion of the profile that could be traded back through. If that occurs, we could be looking at a drop that takes us as deep as 75s, maybe even 80,000, somewhere in there, and then they could be picked back up for a continuation to the upside. But after prices push through 90K, it hasn't even tested 90K here, so we'll keep an eye on this as it continues to develop within the range here for Bitcoin. Ethereum here, this one's up 1 2/3% right now. As we noted before here, this one has a great impulsive move, strong high, strong low, and a bounce back to the midpoint. That key range projects 5,200 long-term down the road, and any pullback here could be an opportunity to trap and reverse it for a long-term target into 5,200 later this year. So very, very bullish from a long-term perspective, short-term bearish, and in the near term here, if you start to give out this 3,200 level, you start to open up some lower levels down below within the previous quarter's range. All right, that is it for now. We'll see how this plays out here heading into the rest of the session. It is Friday, so have a fantastic weekend. Please be sure to like, share, and subscribe. And if you missed the monthly market outlook earlier this week, you can find the link in the description below. Everyone have a fantastic day, and I'll see you in the trading room. Take care.